Welcome everyone to the Vested Interest channel. This is Shane and this is our first stock pick of the day video for the month of November. I did miss yesterday on Monday. Again, I'm very busy right now with my daughters in sports. It is deer hunting season as well, so trying to get out in the field a little bit and spend some time outdoors. But today we're going to take a look at a huge drop on the day for this company. So I thought we'd take a look at it. Zoetis, this is out of the healthcare sector. This is the vested interest stock screener. This is the criteria we will be going through in the video today. It must meet 5 of 8 to make it on my watch list. Now keep in mind, if it does make it on my watch list, does not mean I am interested in buying. This is just an initial screener. It's a way to look at companies out there, thousands of them out there, quick reference to see if I'm interested in doing any more of a deep dive into the financials or if I just want to move on. So it must meet 5 of 8. And even if it was one that I was buying, you should not be buying unless it meets your criteria and your investing timeline, right? We all have different criteria. We're all different ages. We all have different goals. So don't blindly buy anything that I may be buying or anyone you're watching on YouTube or your neighbor or your brother-in-law or whoever may be giving you stock tips. Make sure you are, again, investing based on your investigation, your investing criteria, your investing timeline and goals. All right, now that we've got that one out of the way, let's get back to Zoetis. Check them out on their homepage, www.zoetis.com. That's www.zoetis.com. That is their homepage where I pull this information from. At Zoetis, our purpose is to nurture our world and humankind by advancing care for animals. It's an ambitious and humbling pursuit, but with an engaged and talented team with diverse backgrounds and perspectives supporting our customers all around the world, we've experienced 70 plus years of success in animal health. So much like pharmaceutical companies that focus on our healthcare, pharmaceutical drugs, that sort of thing, this company, Zoetis, focuses on animals, and that's pets or livestock, right? So you can look over here and see some of their drugs that they have. They cover cats and dogs, fish. You got a fish tank. Cats and dogs again, a lot of cats and dogs, so household pets, but as well as beef, cattle, dairy cattle, so also livestock out there for the farmers and cattle ranchers that we have. They also need those drugs, just like we need vaccines. Animals need vaccines as well. Whether you like them or not, it is just part of it. We don't need animals or people dying from preventative diseases, and that's what this company does for animals. Now, the reason we're taking a look at them, down 13.77% of the day, huge drop on the day. This is a huge drop for a year, let alone a day. We are talking about Zoetis Incorporated, ticker ZTS. This is actually a spinoff from Pfizer back in the day, their animal division, and they spun it off to its own business. So Zoetis used to be part of Pfizer. I should have mentioned that whenever we were looking at their homepage there. But close out the day at $124.48. Looks like they are up slightly in the after hours whenever I pulled this. But again, keep in mind after hours goes towards 8 or to the end of 8 o'clock, 8 p.m. I believe. So this could bounce around for the next few hours here. Now, 52-week range as low as $122.03, as high as $181.85. So they are very close to their 52-week low currently, and definitely within 15% of that 52-week low, which is where I like to start looking at companies. This one has been down for a while. It was floating around that 130 to 140 range. Now it busted through that. Hasn't quite busted through that 52-week low, but not very far from it. Might be a good time to look at it. Like I said, I don't think people are getting rid of their pets. I know my wife has some drugs for our dog to keep him calm, hyperactive pit bull that we have, and he's on some drugs. He also has some issues with his hips, so it's some sort of, muscle relaxers or whatever they are. But we definitely have some stuff for our animals here at my house, and I'm sure that is the same around the country, if not around the world. Zoetis does also cater to the world, not just here in America. Market cap of 55.167 billion, a beta of 0.96. So they are less volatile than the overall market, just slightly. PE ratio, price earnings at $21.55, seems a little elevated unless their earnings is growing significantly and can justify that. EPS, earnings per share, at $5.80. Looks like their earnings date was today. So I'm assuming something reported about their earnings, whether that's future projections, whether that's current results, did not meet what people were expecting. Or outlook may have been lowered or something like that. You might want to go look at their earnings report and see what's going on. But a huge drop on the day. So negative news for sure, I'm assuming. I haven't looked at it, but that's a huge drop for the day. Again, that's a huge drop for a year, let alone one day on earnings day. So must have been something negative in the news there. Ex-dividend date, October 31st. We are already past that. You would not get the next dividend if you were to buy them now. They are going to pay that out on December 2nd. So you're going to wait a few months if you do buy them now to get that next dividend. 1-year target estimate, at least according to Yahoo Finance, $187.70. So they do see some upside and a new 52-week high over the next calendar year. $187.70, about $6, $5 and some change less than their previous 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. It's a quick check. It's not the end-all be-all. It's not a discounted cash flow analysis, but it just takes a quick glance at the numbers. 5-year dividend yield average, you look at that first, 0.81%. You compare that to the current. Where was it? It's not over. Well, 0.8% forward dividend is forward dividend. They're saying 1.39. Yeah, 1.39. Same number, 1.39%. So since their current dividend of 1.39% is higher than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Now, looking at their free cash flow, I like growing free cash flow. Hopefully you do too as well. They can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, which this company is doing, paying a dividend. This company does that, and raise that dividend over time as well. And I didn't mention the payout ratio. I like under 75%. They're at 32.08, so much lower than I'm looking for there. But again, going back to free cash flow, December 2021, $1.7 billion. 2022 looks like it dropped down to $1.3 billion, but let's talk about the repurchase of shares here in a second and see if that maybe adjusts that a little. December 2023, $1.6 billion, back up. 2024, $2.2 billion. Trailing 12 months, $2.2 billion. We'll have to see what November and December numbers look like because the trailing 12 months will still include part of 2024 numbers, but it looks like we may be increasing at least over the last few years. Repurchase of capital shares, you can see 743 million in 2022. So in 2022, even though it looks like their free cash flow went down 1.3 billion, their repurchase of shares more than doubled. So that accounts for that 400 million drop there. You could do the math and then check that, but it definitely does in my opinion. December 2023, down to 1 billion. So this is where they might be playing with the numbers, down from 1.5 billion to 1 billion. So is that 300,000? Is 2023 really a increase in free cash flow, or did they adjust down the repurchase of shares from 2022? Looks like they may have offset that by just decreasing their shares and made it look like there's a growing free cash flow, but that difference, I don't think that accounts for it quite. And December 2024 up to 1.8 billion. So 2024 was definitely a good year. Trailing 12 months looks like 1.7 billion, but again, we'll have to wait to see what shakes out over November and December, and what they report in January will tell us the full story for 2025, because this repurchase of shares will include part of 2024 numbers, and we don't know exactly when they repurchase those shares. All right, jumping over to stockanalysis.com. This is another company I go to for information. You pick any companies that you like, any sources that you like out there, but I like these two. There are plenty of them out there. I do recommend more than one so you can make sure the information you are looking at is accurate and up to date. Now, they have 7 analysts that have taken a look at this. They call it a consensus buy with a low estimate of $155. And since it is lower than that currently, that would represent a potential 24.3% upside. Average estimate of $194.29, not too far off what we saw with Yahoo Finance on the previous page, a little bit higher, but that would represent a potential 55.81% increase. And if it happened to hit their high of $244 estimate, that would represent a 95.67% increase. That's pretty crazy. I do like it whenever all of the estimates have upside, right? Even the lowest estimate of 155. Now, I do like to look at some statistics as part of my initial screener, right? Again, keep in mind this is just a screener. Return on capital employed is one of them, and earnings per share growth. Return on capital employed, I like above 10%. They did not have anything listed, so can't go by anything there. This is where I'd look for a second or third source. Earnings per share growth, I like above 5% projected over the next 5 years. They're at 10.73%, so double what I'm looking for there. Revenue growth forecasted at 5.5%. Dividend history here. Quarterly payer, as we mentioned, payout ratio 34.38%. So again, much lower than that 75% that I look for. Dividend growth, double digits, 15.74%. So it's nice to see a low payout ratio with a high dividend growth rate. 12 years of dividend growth, buyback yield is positive at 2.21%. That means they are pulling more shares out of the market when they are buying back shares than they are issuing. Shareholder yield positive 3.8%. Now, they do pay on the same schedule most companies do, March, June, September, December. So this would not be one to kind of balance out the portfolio. This would just be along with most of your ETFs and companies payout timelines. Going back to April 2023, 37 cents and some fractions of a penny. Raised that up January 2024 to 43 cents and some fractions of a penny. Raised it up again January 21st up to 50 cents. So definitely nice dividend growth on this one over time, and I would anticipate another dividend, unless they stop dividend raises because of poor earnings or something like that. I would anticipate January of 2026 coming up here in a couple months that you will see the next dividend raise. We'll see if it's still the 15% there, but that seems to be the timeline when they are raising that dividend. All right, let's run them through the screen or see how this one shakes out. Understand the business. Again, they are a pharmaceutical company for animals instead of people. That's really the easiest way to break it down, whether that's your household pets or your for your cattle ranchers and your farmers out there, livestock out there. Both of those fall under that. Growing free cash flow. I'm actually not going to give them a check there because I believe the 1 year in 2023, or was it 2020? I think 2023. They did some funny things. They adjusted down their repurchase of shares to offset the, looks like, a decrease in free cash flow. Pretty close. If you did the math and you're saying they were growing, go ahead and give them a check there. But I'm not going to give them that one. Growing dividend, yes, they are growing at double digits. Nice to see, again, a double-digit dividend growth with such a low payout ratio. Anything under 50% to me, they should be aggressively raising that dividend. Doesn't have to be double digits, but it'd be nice to see single high digits, 7, 8%. Dividend payout ratio under 75%. Yep, we saw that. Again, under 50%, under 40%, really in the 35 below range, right in there, 34, 35. Check valuation based on dividend yield theory. Yes, dividend yield theory says they're potentially undervalued. It is within 15% of a 52-week low. Actually, it's very close to its 52-week low. Return on capital employed was not listed, so no check there. Earnings per share growth was over 10%, so it's definitely above the 5% I'm looking for there. So check 1, 2, 3, 4, 5, 6. It does meet the criteria to make it onto my watch list. I believe this one maybe was already there. But Zoetis, very interesting company. Again, a lot of people really care about their pets. You got single people out there who have pets. You have families that have pets. You have, the, not to be rude, but the old cat lady who has multiple pets, and they are definitely not above spending money to make sure they prolong the life of those pets. They love them just like their kids and their family. I know we do at my house. We've got 3 dogs and 2 cats. So again, it definitely is one. I'm sure if our products, I'd probably look on the box and see where they're from. I would not be surprised if they are from Zoetis. Do you have pets? What do you think of Zoetis? Huge drop on the day. Again, go check out their earnings. Let me know what you think of the company. Is it one you're buying? Is it one you're watching? Maybe it's one you are selling and you are part of the downturn today, dumping those shares. If so, let me know in the comment section down below why. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit all of those buttons down below, that thumbs up, that notification bell. Hit the drop a comment. Let me know what you think of this. Again, hit all of those buttons. Share with anyone you think that might find value in the content. It really does help out the channel. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. And again, don't forget to hit all those buttons down below. It really does help out, and I really do appreciate it. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.